The Australian property market is crazy right now.
Have you ever bought a packet of fish and chips at the beach and been surrounded by a flock of seagulls, all fighting over who's going to be eating your scraps?
Mine.
Well, the property market is a lot like that at the moment.
Listen, if you're looking at buying a house right now, you'll know what we mean.
House prices are rising at an exponential rate and selling as soon as they're listed. On average, houses are selling in just 32 days.
That's nuts. And the crazy thing is most houses right now don't even make it to the market.
And if you do find a property you want to buy, you better be prepared to make a strong bid.
People are fighting hand, tooth and nail. They're offering way above the list price and still getting rejected.
And auctions, they're no different. Most properties are selling for 20+% over their reserve price at the minute.
It's totally wild. And if the boom continues, it's only gonna get worse.
We're well and truly in crisis mode. And if you're concerned about this or feel like giving up the dream of home ownership, you're not alone.
So according to a new report that's just been released titled Taming the Elephant in the Economy, home ownership looks to be out of the reach of most Aussies under the age of 35. Nate, how did we get here?
Well, let's flash back 12 months ago. Almost all banks and economists were predicting that house prices were going to fall due to the pandemic's effects. Some were predicting a small drop in price, others were predicting a drop of more than 20%. But they were all wrong. Instead of dropping by 20% or more, house prices actually increased by 20 to 25%. So what caused this?
Like any market, the property market is driven by supply and demand. And right now, like we all know, there's way more demand and not much supply. So let's have a look at each side of this equation.
The first is demand. Interest rates are the lowest we've ever seen, meaning it's cheap to borrow money. And since we can't travel, a lot of Australians are choosing to use their money they would have otherwise spent on a holiday as a deposit to buy their home.
It's a big holiday.
All this has increased the demand for housing. Second is supply. Uncertainty about the economy means that fewer Australians are looking to sell at the moment. And we haven't been building enough houses to keep up with demand. So supply is simply not enough to meet the market's requirements.
Yeah, the things like home builder grant and all the other incentives that are out there haven't actually come into effect. People haven't been able to move into homes because they're still building them.
And what happens when you have high demand and low supply? Exactly what we're seeing at the moment. The property market is exploding in prices.
Our housing market is already one of the most unaffordable in the world, and heaps of Australians have already been locked out of home ownership. And it's mostly because the prices are rising faster than most people can save a deposit.
The number of home buyers under the age of 35 has dropped by 50% since 1995, with most properties concentrated in the hands of 65 years old and older.
Thanks, Mum and Dad. Damn boomers. And the impact of this housing crisis goes way beyond your ability to buy a home. If it's left unchecked, it could be completely devastating for our whole economy.
According to Chris Leishman, professor in property and housing economics at the University of South Australia, Australia is in a triple crisis. The housing sector is fueling a threefold problem. The first is creating an unstable economy, second, generating inequality, and the third, which is weird, reducing productivity.
Now you might be thinking, hang on a second, doesn't the housing boom mean our economy is also booming?
That's usually the case, but currently, the crisis is actually having a reverse feedback loop. Expensive houses are driving young professionals out of cities into outer suburbs or regions where they can afford. This means productive workers are being displaced, which will have a long-term effect on productivity, which will harm our economy. As they say in the report, the housing system elephant is not only a beast poorly grasped by policymakers, it's also rampaging through our economy.
The report's authors think it's so bad that they're calling for a royal commission into housing and to expand the Reserve Bank's responsibilities to include monitoring house prices.
So that's where we're at. The property market has gone out of control.
But what should you do about it? Like and subscribe. Nate, should I buy a house now or should I wait to see what's going to happen in a few years' time? Maybe it's going to crash. Maybe I'll buy it really cheap and everyone's overpaying now.
Well, like all complicated decisions, the answer is it depends.
Like all those people that were predicting the 20% drops last year, predicting the property market is a bit like predicting the weather. Short-term weather forecasts are pretty accurate. If the weather woman tells you that there's an 80% chance of rain today, you'd best pack an umbrella. But she can't really tell you if it's gonna rain 3 weeks from now because the weather is complicated and a chaotic system.
And so is the property market. As we've seen in the last 18 months, the Australian market is so unpredictable. So anyone that tells you that they know where the property market is going in the next few years is either lying to you or just plain deluded. So our advice is ignore the market. Since you can't know where the property market is going, there's no point obsessing over it. Instead, you should focus on what you can control. If you're at the stage in your life where you're thinking of buying a home, then make sure you're financially and emotionally ready. And make a decision based on that.
Here are some questions you need to answer before you decide whether to buy now or wait a bit later. First, are my job and income stable?
This one's not a deal breaker. If the pandemic's caused some fluctuations in your income and employment, we know lenders that can accept income from a new job, freelance work, or casual employment.
I had one recently from a pilot. She'd had a bunch of time off during COVID because the airline wasn't flying and was really concerned. Thought, well, my pay looks really bad last year, but I'm back in work and things going normally. Luckily, the bank looked at the most recent pay slips and said, hey, we understand you were flying during COVID. It's back to normal now. We'll use your pay as it is today. So Nathan?
That's right, Jayden. You're better off in a job and an income situation where you've got some stability. A mortgage is a 30-year term and it's a long commitment. You're in it for the long haul. A stable financial situation will help you feel more confident with your buying decision. It will also increase your chances of getting your loan approved. Lenders like to see borrowers who have already had a few years of income and consistency in employment history.
Now the second question, is your debt to income ratio low enough? Are your living expenses in check?
One of the key things that the lenders look at when assessing your home loan application is your debt to income ratio, or DTI. It's calculated as your total debts and liabilities divided by your gross income. The lower your DTI ratio, the better. Although each lender has their own criteria for acceptable DTI levels. So cut down on your debts where possible. It'll give you more options for a home loan. Lenders will also look at your living expenses. In some cases, they'll go through your bank statements with a fine-tooth comb to see your spending habits are in check. If your living expenses are too high, your application could get rejected. So cut down on unnecessary expenses as much as possible.
Third question is, do you have enough deposit?
You need to have enough savings to cover upfront costs for buying a home. Typically, you'll need 8 to 10% in order to satisfy the lender and cover additional costs.
These include things like stamp duty. If you haven't saved up enough deposit yet, it could be worth having a visit to the local bank of mum and dad. Gifted funds from parents can be used towards your deposit. If your parents own a property as well in Australia, you can also ask them to use a guarantor loan, where the bank sticks a loan against their property in lieu of deposit.
With a guarantor loan, you can borrow more than 100% of the property value without paying lender's mortgage insurance.
Question 4, is my credit score high enough?
Lenders will look at your credit score to determine whether you can repay your loan on time. If you have defaults or other credit issues, they might reject your loan application. It's best to check your credit report before applying for a loan. You can get a copy of your report free from any credit reporting bureau, Experian, Equifax, or Elion. If your credit score is fair or below average, you may want to address these issues before applying for a loan. Some lenders will still offer you a loan with low credit scores, but they'll generally have higher interest rates.
The fifth and final question is a personal one, but is the time right for me?
This is the most important question, so we've saved it till the end. Like we said earlier, trying to predict the property market is a fool's game. Waiting for prices to fall or the property market to cool down could take a while, or it could never happen. Or who knows, maybe in a couple of years' time, we could see the housing market crash. You can't predict it, so focus on what you can control.
If you're emotionally and financially ready to buy, then now is the right time. There will never be a perfect time to buy a home. So if you wait on the sidelines for the perfect moment, you could be waiting forever.
So if you have all your ducks in a row, we say go for it. Reach out to us here at Hunter Galloway, give us a call on 1300 088 065 or head to huntergalloway.com.au and fill in our free assessment form. We can review your financial situation and help you find the right home loan. And if you're not quite ready to buy for whatever reason, check out some of our other YouTube videos or join our Facebook community. We have a ton of training and resources to help you on your way to buying your first home. So thanks for watching, and we'll see you next time.
I can subscribe.